Hey everybody, it's Chip Harris again. Just wanted to get back with you on current state of the market in terms of housing and the overall economy. And it's a big week this week. Big week, Wednesday. The Fed meets again and votes whether or not to raise interest rates, and if so, how much. We all know they're going to raise interest rates. I think that's a consensus decision already made in the minds and hearts of our Fed chair and the board members. The question is, 75 basis points or yes, one whole basis point? I think it's going to be 75 basis points, but folks, this could be a 1% increase, which would be one of the highest increases of all times. And yes, the Fed is raising rates higher, faster than most ever before. And I'll tell you, it's shocking the economy. Yes, inflation is high, which is why they're doing it. But I will say this. It is super slow in the housing market. I read an article today, it was in the New York Post, and they discussed the fact that, yes, the housing market is in a recession. It has been in a recession for 3 or 4 months now, but now economists are starting to call it a deep recession, a deep housing recession. Now, we are also in a recession from an overall economy perspective, based on what a lot of economists say and based on what I believe as well. And so the economy as a whole is slowing down significantly, but not fast enough to temper inflation as of yet. Inflation again in August came back at 8.3. And so at that rate, it's way above the 2.5% target that the Fed's trying to shoot for in terms of inflationary pressure. And a lot of people think if you take energy out of the mix, because energy prices have actually been going down a little bit over the last couple of months. If you take energy out of the mix, the core CPI inflation is much higher than 8.3%, potentially into double digits at this point in time. So the Fed being very aggressive with interest rate increases, trying to tighten their policy on tightening money. Of course, what this means is when they increase interest rates, it increases significantly the cost of borrowing money, both for corporations, businesses, small and large, and for us as consumers. If we have credit cards with variable rate interest rates, equity lines, anything that has a variable rate is shooting up right now because the prime rate is going up. And it also affects mortgage rates, not directly, but indirectly, because treasuries end up going up. The dollar is worth more than it has been in a long time as compared to the euro or the yen or, it really most any other foreign currency, because the dollar is the safe haven on the planet right now for everybody, no matter what country you're from. So the value of the dollar goes up, U.S. Treasury yields go up, mortgage rates go up. And so right now we're seeing a lot of times, if you have really good credit, you can be in the sixes. But now, most average normal folks applying for a mortgage are seeing 7+ interest rates on mortgages. So that, not single-handedly, but primarily, is what's causing the housing market to really just pump the brakes in a big way. New housing, new builders, panicking right now because they got inventory coming on. They've bought lots that they need to build on, that they need to really then sell homes on. And demand is really grinding to a halt, especially for new construction. So keep an eye on this. We will talk again later this week once the Fed meets. And again, I think it's going to be a 75 basis point increase. Could be one. We'll see. Till next time, I'll see you later.